Elon Musk, the CEO of Tesla and SpaceX, had a pessimistic outlook for the economy in 2022. In a tweet, the tech billionaire predicted the start of a global recession. According to Musk, the globe will face an economic or financial crisis this year. Safe to say that so far, the year is certainly living up to his predictions, and economies are currently struggling to get back on track. Musk did not, however, add any other information to the statement, including no explanation for how he arrived at this decision. What prompted the billionaire to make this prediction? What's the consensus from financial analysts and experts? Keep watching to find out. Is the world on the verge of another downturn? A growing list of threats is clouding the economic outlook, just as the global economy is recovering from the COVID-19 pandemic. Still, most economists believe a recession this year is improbable. People are concerned about a recession for good reasons. Inflation, interest rates, and the Ukraine war are causing global economic damage. At the beginning of the year, Elon predicted an imminent financial crisis. When asked about this, he said, "Predicting macroeconomics is hard. It will happen in the spring or summer of 2022, but no later than 2023. Echoing Musk's words, Tara Sinclair, an economics professor at George Washington University in Washington, D.C., told Al Jazeera in an interview that recessions are tough to foresee, and even the best forecasters, such as the Federal Reserve, don't know we're in one till we're in it. Musk made these predictions just before many situations took a downward spiral. In 2022, the Ukraine conflict, Russian sanctions, China's zero-COVID policy, soaring inflation, and interest rate hikes by the U.S. Federal Reserve are all expected to stifle gross domestic product. The concern is whether deteriorating conditions and ill-advised policy decisions will cause the global economy to contract from a slowdown. Musk isn't putting a lot of money on unicorns either. Twitter user Christopher Mims, who produced a list of worldwide unicorns from various industries such as AI, consumer retail, auto, and transportation, concurred with Musk's stance, saying, "There are more than 936 companies valued at more than $1 billion in the globe today. What do we think this chart will look like in 5 years?" According to Musk, if history is any indicator, few will survive the next recession. So what's the consensus among financial analysts and experts? It's important to note that some economists are perpetually pessimistic. When a recession occurs, they refer to their precise forecast, forgetting the numerous times they've warned of impending doom. However, today's mainstream economists are more concerned. A poll from Reuters, conducted between April 4th and 8th, indicated that 1 in 4 economists expect the United States to experience a recession this year, with that proportion climbing to 40% over the next 24 months. However, many believe this to be a false alarm. Because a corporation that hunkers down too soon may miss opportunities to strengthen its capital position through high sales and earnings, the next recession's timing is essential. On the other hand, delaying the transition to recession mode can be fatal. With so much riding on the recession's timing, it's risky to rely on scary but statistically illiterate publications. According to experts, if a panel of economists is asked to assess the chance of a recession and the average or median response is 25%, it's very likely that no single economist believes the danger is greater than 50-50. Larry Summers, an economist, former Treasury Secretary, and Harvard president, also forecasts a severe recession but did not define when it would occur. According to a Markets Live poll done by Bloomberg, investors and economists are on the same page, with 15% anticipating a recession in 2022, 48% in 2023, 21% in 2024, and 16% anticipating recession in 2025 or later. A period of widespread economic downturn marked by a dip in the stock market, a rise in unemployment, and a decline in the housing market is known as an economic recession. A recession is usually milder than a depression. The government leadership, usually the president, the head of the Federal Reserve, or the entire administration, is held responsible for a recession. With pent-up demand for numerous items, the U.S. economy still has many stimuli making their way through the system. We believe this argues against a recession in 2022. However, a slump in late 2023 or early 2024 has a considerably higher chance. Other experts believe the United States economy will undoubtedly enter a recession, but that does not mean it will begin this year, or next year, or even the year after. However, there will be a recession, and every business should be prepared. Musk, recently expressing his pessimism about the economic condition in 2022, seemed to kick off the series of gloom events of the year. There was speculation that the recession Musk was talking about might start a stock market sell-off in the United States, which eventually occurred. Initially, the stock market in the United States was at an all-time high. Outside of the stock market, there wasn't enough fresh funds though. Stock funds in the United States are gathered in the polls of a few major corporations. As a result, other companies' valuations were low. Obtaining financing had grown more challenging, and with the Federal Reserve having a conservative monetary policy, the liquidity crunch was worsening. The rate of inflation in the United States also hit new highs. The prices of goods in retail establishments grew in the last 6 months, which is transparent information. The next stage of the financial crisis will be determined by the Fed's ability to exit its quantitative easing monetary policy effectively. The Federal Reserve in the United States is faced with the difficult problem of lowering inflation, which is at a 4-decade high, without triggering a recession by hiking rates too quickly. Most economists believe the central bank had only done it once before, in 1994, when then-Chair Alan Greenspan oversaw a doubling of the benchmark rate without destroying economic growth. A downturn in the world's largest economy, which recorded its fastest expansion in decades last year, would reverberate globally, threatening to send growth into reverse barely 2 years after the world economy shrank 4.3% due to the pandemic. Bill Dudley, the former president of the Federal Reserve Bank of New York, said last month that a recession was now essentially likely because the Fed had waited too long to tighten policy. Following a quarter-point rate hike last month, U.S. Fed Chair Jerome Powell stated that the central bank could more likely achieve a soft landing this year. Now to the question on almost every investor's mind: how is Tesla faring? With its vehicle manufacturing ramp in Germany, Tesla appears to be taking a calculated approach. According to local media, Tesla plans to start producing 1,000 electric vehicles per week at Giga Berlin by the end of the month, increasing from 5,000 to 10,000 per week by the end of 2022. Last month, Giga Berlin began vehicle deliveries during an event attended by CEO Elon Musk. Giga Berlin handed up its first batch of Model Ys during the ceremony, but reports from keen observers suggest that the plant is currently building up its vehicle manufacturing slowly. At the Gigafactory Berlin site, Tesla is currently constructing a dedicated battery cell production facility. The factory's development has gone rather quickly, and there is a high optimism that the battery facility will be functioning soon. Estimates that Tesla could switch to 4680 cells and its made-in-Germany Model Y could be proven correct. Meanwhile, manufacturers, including Tesla, have begun preparing to resume their Shanghai factories as the city works to lift the COVID-19 shutdown, which has kept most businesses in China's economic center closed for 3 weeks. Two sources told the Reuters news agency that Tesla recalled staff to its factory to prepare for the restart. On the topic of Tesla stock, despite mounting fears of a U.S. recession and shutdowns of Tesla's Shanghai production due to a spike in coronavirus infections, star stock picker Cathie Wood of ARK Invest remained positive on its top holding of Tesla Incorporated on Tuesday. Many find it interesting that Wood is still optimistic about Tesla, regardless of the recession rumors. In a recent webcast, she said, "What we mentioned during COVID about innovation solving challenges will go into overdrive." Wood predicts that as Tesla extends itself to meet demands under these high-pressure conditions, it will achieve genuinely exponential growth for many years. Wood's bullish position on technology comes as 2-year Treasury yields have recently surpassed 10-year Treasuries, which is frequently seen as an impending recession. What do you think? Will there be a recession as Musk predicted? Comment down below.